Hello, here are my counts for Ethereum on the monthly chart. So this first count is having cycle wave 1 over here, which is the highest degree. And then you have the 1, 2 of a lower degree, and then 1, 2 of even a lower degree, and then 3, 4, 5, 4, 5 looking for way higher prices. So the alternative to this is having cycle wave 1 over here, which is perfectly fine and viable. Then you have the W, X, and then ABC for a wave Y, leaving much more room here for a wave Y to finish wave 2 here, and then you move up in either a wave C or a 3, because we don't know if this is a 1 or an A. So if we take a look at this scenario, why have I the other one with the cycle wave 1 over here? So here you have the 1, 2 of the lower degree. So this is a 1, 2 of a higher degree, and you measure this in time, comparing it to this of the lower degree. And this is too long compared to this, and therefore it is lowering the probabilities that this is indeed a 1, 2. But time is never an invalidation, it's just a guideline. But it is pretty accurate. So that is lowering the probabilities for this scenario. And also here in the 1, 2 of a lower degree, we hit this line, which is a low probability wave 2, lowering the probabilities that this is indeed a wave 1 and a wave 2 and 3 and 4 and 5 and so on. But as I have written here, we hit this as well here, moving up, so 1, 2, 3, 4, 5. So Ethereum can hit these low probability wave 2 targets, but it is still uncommon for a wave 2 to hit it. So therefore, this has a lower probability of being a wave 2. So if we take a look at this then, if we have cycle wave 1 over here, then you are looking for a W, X, and then ABC for a wave Y, which leaves a lot of room for us here to finish wave 2, and then you move up if it is a wave 2 or a wave B. So, but if we go back to the first scenario here, the bulls do not want to take out this because that's the invalidation for this entire count. So here on the 3 daily chart, you count it like this. So ABC in a W, X, A, B, C in a finished wave Y. And then the bulls need to have a 1, 2, 3, 4, 5, a leading contracting diagonal, preferably taking out this wave 4 invalidation, which invalidates a bearish count here at 2018.87. Then moving down and also taking out this invalidation here at 225206 without taking out this, because if we take out this, then this scenario is no longer valid because this is connected to this bigger count, because then we have taken out this. And also you can count this in a bit different way, because here the 1, 2, 3, 4, 5, you cannot have wave 1 over here. It is not possible to count it like that. So you need to have wave 1 over here, meaning that wave 2 is this big, and then you have 3 and 4 crammed in here. Wave 4 is not even reaching 0.382 in time, which is a very low probability for a wave 4, thus lowering the probabilities even more for the bulls, because a leading diagonal is also a very low probability structure, as I mentioned in my previous video. So it's not looking great for this scenario. It's not breaking any rules, it's just guidelines. So the alternative to this scenario, still having the bulls in play basically, is counted like this. So W, X, A, B, 1, 2, 3, 4, 5. But the problem here is we need to finish wave C above this line. So you basically we need to take out this low if we're not truncating, but that is extremely uncommon. So we need to take out this low and we need to stay above this line. So we have this room to play with. It is possible, but it is low probability just because also we hit this low probability wave 2 target. But nonetheless, this count does not want to take out this at 2018.87 because then it's a low probability for a wave 4. But as I mentioned, we need to stay within this area for this scenario to work and not taking out this invalidation. I can show you here in numbers 1383.26. So after that you are looking for upside. But if we take out this, we need to resort to this count. And then it is possible to have much lower prices. So here, if we zoom in on this part and is connected to this count on the 3 daily chart, you count it like this. So 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 5, 4, 5, and you can go even further down, because if I go back here, apologize for all the switching, but it's important to know how it is connected. So if you go back here, this is the minimum target for a wave B. It's an uncommon target, but still it's a minimum target here at 424, meaning that we could basically go down here and it's about 75%. Then you have the minimum target for a wave 2 here at the 38.2 fib at 92.7. So yeah, you have a lot of room to play with. So we don't have to hit these, because I have seen moves before, wave 2s not hitting the 23.6 or 38.2, but it's still most common for a wave 2 to at least hit the 38.2. If we hit 23.6, it is more common for a wave B, and especially after triangles and things like that. But nonetheless, it doesn't really matter as of right now, because then you are still looking for upside, but then it's a higher probability of being a wave C than it is a wave 3. But yeah, these are the counts I am looking for. And also, if you want to check out the 4-hour chart that I did the last Ethereum video, I go into details here in the probabilities and also the count that I am looking for shorts, if we are not then taking out this 2018.87. And it's a higher probability that we are indeed taking out this because of the leading diagonal and things like that. So check out that 4-hour video if you want to have a even more bigger picture and all of these, how they are connected. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.